everyone, welcome back to another episode of Team Junya Coffee Talk. Today we have Antito, who's gonna be sharing some of the toughest audit case he's been having or taking over the past, 18 years he's been doing in his profession. So Antito, can you share some of toughest audit case that you've been having?
Right, cases that we took on and how we won, right?
Okay, good.
Well, there are cases you take on and you lose, right?
Exactly.
But we've been very successful. If I could boast a bit, because again, it's an art, it's a science. It's about the hard work and commitment you put into it, right? And again, you're not dealing with an entity that is not exactly efficient or capable. Right, but at the same time, that's the government. That's who you deal with.
Right, there's law.
But there are folks who are very, very helpful on their end, and there are people who literally are very good at their job. And the sad part is that's quite rare, right? And so when we said, some of the toughest cases is because of those challenges. That the challenges of having to deal with IRS or franchise tax board, whose capacity seems limited, and also who just seems very difficult to have some results. And just because you said one thing and they disagree with you or they see differently, right? The burden of proof is on you, right? It's not like family law where we're all innocent until proven guilty, right? Your job is to actually, in tax court or tax issues, to prove that you're innocent, right? We're going to assume you're guilty because you don't agree, right. And so, anyways, long story short, some of these big cases, 18 years, we have hundreds of cases. We talked about really taking on every case that's out there because part of it was learning, part of it was a challenge, part of it is just pride that we have in saying, we overcame so much of our life as the refugee and immigrant community. Why can't we face this, up front and try to deal with it? And so, nobody can take that away from us, right? That resiliency, but also, are we perfect in our records? Are there still room to learn? Hell yeah, right? We're not perfect. So the reason why I want to share some of these big cases is because of the lesson learned from it, right? The challenges, but also the result, the happy result that came out, right? And the reality of, yes, there are tax laws you got to follow, there are compliances, there are due diligence, there are procedures and protocol, but there's also human interaction. There's also the art of negotiating. There's also the byproduct of hard work, being resilient, like literally taking on a case and just keep pushing until, you get the right answer, or you get the right results, right? We talked about tax advocacy, I think last time when we talked about being persistent and reaching out to them, and finally got some resolution for a case that took 3 years, and getting the money back in addition to the interest they owe us, right? And them accepting the amended return that we submit, right? So, I don't know where you want to start. I got so many cases I want to share with you.
I actually heard, about your truck driver, audit case. So can you give a little bit background when, how it became to be one of your toughest audit case and how you guys won?
Right. Well, I love my truck drivers along with my nail salons and restaurant owners, right? But that's the industry our community members, a lot of the immigrant communities are a part of, right? Truck driving, a lot of them are 1099 independent contractors, a lot of them have their own trucks, a lot of them, will work just using other people's truck. The problem is that, these are truck drivers, they're constantly on the road, right? And financials or taxes is not exactly their cup of tea. They hate dealing with taxes, they hate dealing with, sometimes all the compliance that you have to drive a big rig, from all the Department of Transportation requirement, the weighing, and the various tax requirement for franchise tax board. I'm not going to talk about that today, but really the challenge in this case, it was the fact that he came to us after he reached out to a tax attorney in the Bay Area. He's a Vietnamese American truck driver, sweet guy, very, very meticulous with his record keeping. Kept everything from receipts, invoices. With the truck, you can think of as a big tool with a lot of expenses. But unlike other trucks, there's a business equipment, right? So there are car washes, truck washes, and weighing stations, permits, licenses, and everything. So he got audited. The IRS says, hey, some of these expenses we do not accept, right? Yeah. So remember, there's two things that they look at: income underreported, or something that they feel like is not matching with what their record, or they believe what they believe to be, or expenses that you claim to minimize your taxable liabilities is not what they think is part of the standard, or it's believable, right? So his case wasn't so much the income; it was the expenses. However, the unique part about this case is this client had every record you can imagine.
Wow.
All the receipts.
That's really good for his case.
And the reason why it's tough is because we kept escalating it. There was a tax preparer that filed his taxes. He went to a tax attorney to fight the case. It got nowhere. Got to me. We escalated. We actually reached out to the IRS, did an appeal. All right. And then that appeal became, obviously because they didn't accept it, went and escalated to tax court. 18 years, I can promise you that 99.9% of the time, most cases do not go to tax court. Very, very rare, okay? I'm not a tax attorney. I'm an IRS enrolled agent. I deal with the IRS. When you gotta go to tax court, you gotta get tax attorneys, right? Attorney on can do all that, right? Of course, my client did not want to retain another attorney to represent him in tax court. He wants me to do everything, right? And again, I don't want to go to tax court. It's stressful. It's intimidating, right? San Francisco tax court, the IRS has their own legal counselors and advisor, and those are all tax attorneys. They're great guys. I work with a lot of them, right? They're not always the best. There's some good ones out there. And I'll share that other story later. But this particular case, it got escalated to be scheduled to go to tax court, which I was shocked, because I'm like, for what we were fighting for, and some expenses of overnight, some expenses for equipment and tools, some of my expenses I can recall were car washes and meals and entertainment, which wasn't crazy numbers, but for some reason they did not want to accept it. And my client did not want to give up. He literally said, every receipt I got, I can substantiate that it's business related. I can substantiate that these are legitimate receipts. That's very rare, okay? And in addition to it, the client just did not want to give up. And even though I share with him my capacity, but my limitation as well, not be able to go to court for him, right? In addition to that, it's just the fact that there's cost to him. Like, my time is valuable, right? And I might not necessarily get what he wants, so why would you want to keep escalating it? But also, we're stubborn because the IRS did not want to work with us. Like I said, 99.8% of the time, they will work with us, and we keep appealing it. This case, they did not want. So we were scheduled to go to court on Monday, getting ready, get all the financial statements ready, all the tax return, all the receipts, everything's ready. I get a call, on Friday afternoon from a judge. He wants the IRS counselor, which is IRS attorney, tax attorney, to be on the call with me. And he, in not so many words, he said, you guys, I don't have time for this. You guys got together and make it work. Okay, or you want to pursue to do this, then I'll schedule you guys to meet me. But I guess he reviewed the case and realized that it's not that serious. Obviously, he's not going to go against the IRS and say, oh, settle it. He's not going to say that exact word. He's not going to say, Mr. Huang and Mr. Nguyen, we don't believe you win this case, settle it out there. He's going to say, take a look at it, whatever you guys can do to review this case. I don't believe this should be escalated to go to court. That's what exact words. So I feel like there was a little leeway there, right? Like, hey, if the judge doesn't want to go to court, but I'm not giving up on my appeal, right, or my pursuance on what what we should be able to claim, then the IRS needs to work with us. Okay. So long story short, we got together, went upstairs to the IRS office on South Watt Avenue. He looked through all the expenses I gave him, calculated, he wasn't very happy. In the end, he gave us, I would say, about $5,000 additional deductions.
Wow.
Right? That came out to be a couple of $1,000s in tax savings. But to me, I want to be biased. That was more than we can ask for, to be
Right.
frank. Okay, with all the fees and all the time we spent.
Mm-hmm.
But the client wasn't so much about the dollar amount; it was the principle for him
Right.
that he has the receipt,
Mm-hmm.
and why did the IRS not honor it?
Mm-hmm.
And so the lesson learned was this: okay, just because you got the receipt does not make it legitimate business expense. And so that's what the IRS is saying. Yes, Mr. Nguyen, you had all the receipts in the world. Great, right?
Yeah.
And which is very rare
Mhm.
compared to
Yep.
most cases.
Right.
But I don't believe that these expenses were typical or ordinary part of your truck driving business.
Yeah.
Okay, so that's somewhat subjective, right? Because I can say, hey, he had to get those truck wash. He had to buy this equipment with this tool. Here's the receipt. Here's, the example of what he used it for, right? Or there are the meals expense that he incurred. So he went back, looked through everything, gave it an extra $5,000 deductions. I'm looking at the client and said, man, you're not going to get anything better than that. I can then go to court for you and charge you for the time that I'm taking, even the time that I'm spending 3 hours driving to San Francisco court. But for the sake of giving them, some leeway in saving face, okay, and saving face is important to me too, okay, because you can say, hey, I deserve to get $10,000 deduction instead of $5,000. Well, you can find that all day long. I'm still going to charge you for the time I spent.
Exactly.
Finally, the client agreed. We settled. We did not have to go to court. Tax saving came out to about $3,000. In the overall scheme of things, that's not a lot.
Right.
But it was toughest because it got escalated. One, through 3 different departments, right? The IRS, revenue officer, appeals, then tax court, and the judge intervened and said, you guys work it out.
Right.
I don't want to see you guys at court, right? And the IRS literally went back and looked through IRS agent. He was an attorney for that representing the IRS, calculated everything again in front of me and gave us that. I feel like that was some concession that they were making, right?
So then, even though he kept all of the receipts, right, and obviously when you got appeal, give that to like the IRS and stuff, and they just still denied it, right? So how did your client proving that these receipts were actually involved or related to his business? How did he, take a picture, video, or something?
Well, not necessarily video. Again, the IRS have certain representative, whether it's their attorney, the counselor, or IRS revenue agent, who say, okay, Mr. Truck Driver, not drunk, but truck driver, I believe that these expenses are not typical of the industry. Right? Does that mean the IRS knows about the truck driving industry? Sometimes, yes,
Just
sometimes
an
no.
average standard.
Right,
yeah.
exactly. They don't really know every industry.
Right.
To be fair, truck driving is unique in that, yes, there's a lot of truck drivers out there, but not all truck drivers are the same. There are long haulers and locals, and some are contractors, some are owners of the truck, operators. I mean, there's a lot of nuance to it, right? So it's on the taxpayer and the representative, the agent, to shed light, to share a clearer picture of what type of business this guy has. Right, or that he is.
And how he operates his business.
And how these expenses relate to his business, that it could not be used for personal.
Okay.
Right?
Gotcha.
Or that could be, out of the ordinary or not typical of this industry. Does that make sense? So yes, it could be subjective, but a lot of it was very minimal. That's why I was a little ticked off that they were so petty about stuff like that. They didn't give us the benefit of the doubt. But to be fair, they're also saying, hey, it's your job to prove. It's not for me to give you the benefit. Your job is to prove that these are the business and the persistence of the client to not keep going, keep escalating, and me trying to convey to him, and again, it's not always, about money. And there are cases where I would do anything for the client, right? But it has to be reasonable. I cannot spend 3 hours driving to San Francisco and finding a case that's not going to get us the right result because the customer or client is persistent on getting every dollar he wants. Right. We got to be practical too. So I think that's the challenge, was just because you have a receipt, you still got to justify how they relate to their business. Number two, that there are some small amount that you think the IRS will accept, that isn't always the case, and he just drag up. And he went through his tax preparer, another attorney, and to me, this case, I want to say the damage was already done, but the story's already been laid out, right? 3 or 4, 5 chapters. I'm on the 6th, 7th chapter on the 10-chapter book. Does that make sense?
Right.
So the counselor or the revenue officer, the IRS, already saw how things were laid out, and they felt like it wasn't, something that they want to give in.
Right.
And I got inbox to later staff a latter part of the case that it makes it even more challenging.
Gotcha. Okay, yeah, that's really good to know, because you would assume that somebody's so good at bookkeeping themselves, like all the receipts that he's related to his business, and it's not going to be like personal and whatnot. But even with that, it's so challenging to try to get an appeal for your case, and you're right. In this case, it's not about the money for your client, but it's more of like his principle, because he felt like unfairly treated, right? Because he kept all of that. It's all about business. He wasn't lying,
Well,
but that's a really good point.
I'm not saying go against your principle, but you got to be practical and realistic.
Right.
And the burden of proof is on you, right, as a taxpayer, to prove that these business expenses are part of your business. Okay, they're not going to give you the benefit of the doubt, even though we hope and what desire for them to give us the benefit of the doubt. So I think that's part of the challenging part that I felt. That I guess the lesson to be learned from this is nothing wrong with pursuing, nothing wrong to persist and be aggressive and appeal if you stand by that principle that this is what. But understand you're not a tax professional either. Right. And as a guide, I want to make sure to do everything that's in his favor, to his advantage, to within the standard of the law, right? Within the spirit and the letter of the law, right? Obviously, there are nuances and there's some art to dealing with the IRS, dealing with the judge, or dealing with each individual revenue officer. But when the client consistently feeling like they are right all the time, just because they have receipt, that's not
tough.
that's not always helpful either.
Right. But thank you for sharing that tough audit case that you had before. We'll take a quick break, and then we'll come back with the next case that Antito will be able to share, okay? Thank you for sharing that, audit case of yours. What's the next one that you can share with us? Next up is one.
I don't think we have enough time, ma'am. I mean, doing this for this long, there's so many cases that I felt were so compelling, right? And I'm so glad that we're able to talk and articulate it in this kind of medium, in this channel, because I felt like people should learn and should know, right? Partly is your rights, partly is that it seemed like in life, the harder you work, the more you push for towards certain things where you believe things are unfair or things were done incorrectly. You got to pick your battles, right? And that oftentimes, if you felt like, yes, IRS, FTB, they're a big entity, big agency, there's nothing I can do to go against them, right? Even though I felt like, man, this is so wrong. Like, yes, if I owe taxes, I'll pay taxes.
Right.
But the way that it was presented, like what I did was wrong, or that they're disallowing me to claim the credits, or they think that I made more and I reported less, or whatever. Like, yes, there are some area that is not as clear, right? And that is subjective. And I would say use your best judgment to decide whether you want to pursue it or not. But there's certain thing that's so clear, like, man, I didn't make that much. How the heck do you show that I have that much income?
Right.
Or no way, do I owe that much? How does that part of your assessment in saying that I owe this much taxes? And I've reached out to everybody I could, but I just don't feel like, I'm not getting anywhere. I call the IRS for hours and days, and so cases like that, when we took over, when they went through all that, and able to get it to the next level, right? And God willing, able to achieve results that benefited them, literally saved them thousands and even hundreds of thousands of dollars because of that persistence.
Wow.
And to be fair, it wasn't always our work. Some of the cases we took over because the client was persistent enough to say, no, I'm not taking that. Keep pushing. And also in our case where we said, you know what, I don't feel right charging you this much, because I felt like there's a bigger mission here, that I felt the IRS was wrong. That I felt like, it got neglected or got categorized or whatever. It got lost in the shuffle, right? That we should push a little bit more and escalate this, or reach out to tax advocate, or appealing it, or amending it again. Whatever it is that continue the case to give it some life, right? To literally throw some breath into it and fight. And in the end, we got this assessment reductions, and it literally resulted in hundreds of thousands of dollars. Man, you cannot describe that feeling.
Yep.
Right? And that's a client that loves you for life. And as a financial advisor and also a tax practitioner, like, man, they literally bring everything to you and say, man, I trust you so much. I appreciate all your hard work. Right, but then you're depleted by the end of the day because you exhausted so much energy already. That how much energy can you get to take on another case like this? And you wonder how many other cases that you could have fixed and resolved. But we weren't as lucky, or that the client just were not receptive or persistent. So one case I want to share with you is a dear friend of mine, Lilia. Without getting too much of the detail, but Lydia came to us as a case that got audited by the IRS because of an income, what they call underreported, right? That's something that they have on her record that says she has taxable income, and our tax report doesn't reflect that. And the sad part is the same thing that is really similar to the previous case, that she went to another tax advisor. She's a nurse. She got all her nurse friends to go to the same guy. He got audited. That's what all the nurses got that audited. And then she even reached out to another attorney and just got nowhere. And so, simple case, they believe that $150,000 were extra income to her because of what they call a cancellation of debt, a 1099-C. Right, and you can reflect back in 2008 where a lot of us were owning homes, properties that had all these problems because the market crashed, right? And people had debts that they owe, sometimes in the tens of thousands. And IRS said, well, you walked away, you filed for bankruptcy, but it doesn't mean that debt would go away or is resolve, or it's part of the cancellation of through your bankruptcy, right? So they saw that income that she owed, even though she didn't have the house anymore and she walked away, short sale, they see that loan because the bank wrote it off as a cancellation of debt. Understand, once from an interaction point of view, if I'm deducting that as an expense, you got to report that as income, right? Business, one person's income is the other person's deduction, right? Unless you have some other strategy involved, an accountable plan or whatever, we'll deal with that later. But again, more of the story is, if I'm deducting an expense, I'm paying you $10,000. That's my business expense. That's your $10,000 income, right? Same logic. The bank claimed that $150,000 as a deduction because they forgave her for that. IRS see that as an income. Right? Her case is the fact that, one, it wasn't income necessarily because it was tied to her mortgage. It was tied to a house that she lost, right, through short sale, right? In her case, she did not have a bankruptcy, okay? And there are cases where they had a bankruptcy but was not added to the bankruptcy details, okay? So that's unique as well. Long story short, she went through all the channels, tax preparer, tax attorney, never got resolved. Every month she was getting a bill from IRS, $150,000 tax. Then whatever she got assessed to the IRS, California got a piece of that and said, you also owe us another $50,000 or $60,000 tax debt. Okay, I took on the case literally 2 years after the beginning of her ordeal. Okay, so at this time, letters, assessment. At that time, interest, but we literally had to minimize the damage by working with the IRS to do an installment plans, right? And yes, because of the amount of debts, we had to do an installment plan for less. She was a nurse, she made decent money, but not enough money to pay for that $150,000 extra income that they see that she's, that she's subject to taxes. So what was the strategy we used? Well, let's take a look at the tax return. How was it filed, right? Because like I said, most of the time when you look at the tax returns, you will pinpoint which year was it that caused this big tax liabilities. Right? And if you were to fix it, then you need to amend the returns, right? And if you were to amend the return, you got to give a reason why you're amending it, why you believe this assessment is incorrect, right? The hard part is when you're dealing with tax preparer that are not, who were being audited, were not accommodating to the client. We could not get copies of the tax return. That was sad, right? I didn't know her backstory. I didn't know how many properties she had. I didn't know which property had this mortgage that, you know, that they believe was supposed to be income. So I had to go back and trying to figure out which property, what year, how did that balance came about, what happened to the tax return. You know, because the tax preparer was not responsive to us, right? Then, at the same time, get federal tax board to be off our case, even though we felt like we can fix this problem, but it's just the debt was getting too big, and they're being aggressive, right? Literally, garnishment, levy, liens, everything, the whole 9 yards that they were being utilized against her, right? Levy against, you know, her bank account, garnishment from her paycheck, and then lien on the house, right? So, Lydia, I know what you're saying. Best I can do is go back and review the tax return, do an amendment, but I cannot guarantee you that the IRS will support and accept it, right? And we did that. We did an amended return. We shared with them that this was through, you know, a mortgage that was tied to a house that was foreclosed, that was short sale. In addition to that, we also had an insolvency rule that applies to us. Technically, our debts and liability were exceeding what we're making our incomes and asset. That's the insolvency rule that they allow us to use, which we have to kind of calculate how much income you have on the asset you have, compare that to other debts and liabilities, and the difference is it's technically you're underwater, right? And that was the insolvency amount. So we used that spreadsheet, created our financials to make it look clean and strong, and send it over to the IRS. Now again, anytime you do an amendment, it takes months, even years for them to review. And every time we send something and we call back, it's always respond. Give us time to work on it. Give us time to work on it. We're working on it, right? One time we even got a respond back. They didn't accept it. Okay. Now, more of the story. Just because you get rejected the first time does not mean you have to accept that. We send it back again. We send it back again. 3 years later, okay, mind you, I'm not charging her for the time. You know, I'm not. I mean, I feel really, really bad for her because every paycheck
she must be really stressed.
She's stressed. But in her defense, she's such a fighting spirit. She didn't want to give up. She went to three people already before she got to me. Well, I'm the third person, and literally said, you know, she's not gonna go anywhere else, right? And then I have no problem if she leaves me because it was just a dire situation where I really felt like I put everything I could on the plate, on the table, but it was just, you know, there was no concession, there was no communication either. It was just, you know, we're gonna review, we're gonna, you know, investigate further, but we weren't getting anywhere. And it wasn't COVID at the time, but it was just, you know, just bureaucratic red tape on the part of the IRS, right? And I didn't escalate to tax advocacy at that time because, again, they're responding, but they're not responding in our favor. So we keep appealing it or amending what we felt were our argument, you know, what basis we were standing on, okay? And so pushed it. They sent us a letter back, said a supervisor reviewed it and waived the tax assessment, gave us back the $150,000 they say was tax owed, and basically said, okay, we assessed the tax incorrectly. They're not saying they're wrong, they just said they take that back. They basically say they accepted our appeal or our amendment, but they're not saying they're accepting fault. They're just saying we accepted your argument or your assessment of the correction of what's taxable income. So, oh my God, 3 years, got that case resolved. If I have to pinpoint what was it that caused that or affected that to be in a positive result. I would say the persistence of the client is also our willingness to work with her.
Right.
Not even charging her for the time, because it's really difficult to charge somebody 3 years when there's a big old tax debt, right? And even harder after they got that, they're like, hey, don't overcharge me because I know you spent 3 years working with me on that. But I did have the heart to charge her for the time and all that. But again, my story is that one, things could be done very incorrectly or wrongly for so long, and you should not just say, well, it's been so long, let me just accept that. Number two, you can see how one assessment of one tax liability can affect every aspect of your life. Right? Garnishment of paycheck, levy on the bank, lien in the house, and IRS send that information to Federal Tax Board, and Federal Tax Board is like, hey, you owe us too, right? You got all these people on your back, on your case. Give us what we think you owe us, and the persistence of keep fighting, appealing it, and finally the IRS, the authority, right? Because usually Federal Tax Board will accept whatever IRS says. Okay, let's go ahead and credit back what we thought they should have owed us, and give her back all their assessment, all the levies, liens, and garnishment were released. Lien were released, money that they took back, credit in her account, and giving her back the interest.
Wow.
Right.
That's really good.
On the refunds that she should have gotten, if it was done correctly. My God. I mean, to this day, we're still great friends. She actually overcame cancer, and it's that hard fighting spirit that just inspired me to continue to fight every day.
Right.
And again, this is never to say the IRS is wrong or that we're right. Oftentimes, you get on the winning side of the game, right? On the winning side of the battle, just because they didn't want to fight anymore, right? Or just because they said, you know what, I can see how you're right in that regard, or I can see how you could, we could accept your assessment or your disagreement without saying we made some errors in tax law or that we interpret it incorrectly or whatever. They never admit fault. So I think the more of the story, what I'm saying is that it's never just somebody's right, somebody's wrong, and then the person who's right win, right? That you can still win without putting them in a position to say that they're wrong.
Right.
Does that make sense?
Yeah. Wow, thank you. That is such a really great story, and I'm so glad for your client. And you know what? Actually, I do learn from that one. Not only is she persistent, but she actually went to different channel. She went to her taxpayer first, and then she went over to the tax attorney, and then finally she's able to reach to the person who's actually can resolve. But again, she won't know until at least she's tried. But her persistence is what get her to able to resolve her case. So thank you for sharing that, An.
Right.
That's such a tough case.
It was. I mean,
3 years? That is crazy.
I don't want to, tap our shoulders, but we were persistent too, and that's the thing about doing this kind of work is that if you have the heart for people, you believe in doing things the right way and defending sometimes the undefendable because they're weak and that they don't have the capacity. Sometimes you be on the right side of that battle, right? And that you come out victorious. And but that's one of the many stories we have. And if we have enough time and breath and energy, I would like to share you with all the other stories. But we'll come back. I'll show you one more. How's that?
Great. Sounds good. Thank you so much for your time, An.
Okay.
Thank you for sharing that story, Antito. You know what? Recently, have you ever checked out that new Sky Casino, Sky River Casino, I think? Sorry. I think there's a lot of people having gambling issue. Do you have any audit case regarding gambling or gambler issues?
Oh, don't get personal now. You know what I mean? Well, actually, sadly, right, it's a part of our culture, it's part of our community. We want to embrace another venue to go and hang out and enjoy, but frankly, gambling is a big part of what we do in terms of just, extracurricular activity or having fun. But in regards to taxes, oh my goodness, I can...
The winning, right?
Right, imagine how many times I've been confronted audit cases relating to folks who have gambling winnings and not necessarily understanding how tax relates to that, or how they're being taxed.
Yeah.
Because oftentimes, 90% of the time, I would say people will lose money in the casino, right? And house always win. Okay.
Right.
So if people think, well, you know what, I got $5,000 from that jackpot or whatever it was, but I lost $6,000 at the table. Well, then I'm even, I'm good, right?
Yeah.
Or that I'm still negative. Well, IRS doesn't see that. IRS sees that winning of that $5,000 because depends on how it's won, is reported, right, under your social name, and you get that W-2G statement, or sometimes you don't even get anything, or sometimes you get a 1099. And you'd be surprised how many times I got a letter from clients that says, man, I got this audit letter. IRS says I won this much, and that's how much taxes I have to pay for. But that year I lost a ton of money, right? They think that I made $1 million or whatever, because that's what they see from the what they call a win-loss statement from the casino, right? And even that alone is subjective, because that's the company that's tracking it. That's not you tracking it. So they might not necessarily have all the information correctly. And how many casinos have that tracking mechanism? Some of them don't. Maybe even some of the card rooms don't have that.
Yeah, they only track out winning but not our losses.
Perfectly, exactly. So one of the stories I really wanted to share with you, many stories related to gambling winnings and taxes, but the one that it bothered me so much is because, again, I share with you, numerous occasions how I love the IRS. They're the one that give me jobs, right? And being an IRS bureau agent, going through their training and going through their requirements, I feel like I take pride in meeting their standard, right? But at the same time, representing the taxpayer in dealing with them, because it's really what they, they oversee my certifications and licensings and all that, right? And at the same time, they're using us to communicate the right procedures, the right way to do things on behalf of the taxpayer. So not in any way trying to incriminate them, but these are the people that I'm dealing with every day to persuade them to see from my client's perspective, right? Or to let them, be more reasonable with us and minimize the taxes for the client, or at least leave my clients alone, right? So having said that, the frustration part was the fact that I really saw the limitation in what they understand and what they don't understand when it comes to gambling and gambling winnings and casinos and how casinos work.
Your client?
Well, no, the IRS.
Oh, the IRS.
Right.
Okay.
It's because client came to us, an audit case, after their accountant left. I don't know, he went to Hong Kong somewhere on vacation. He didn't come back, right? Wow. I guess China took over, so he didn't come back. And he's like, anyways, the IRS came and paid her a visit. Okay.
Oh.
Yep.
She must be freaked out.
I'm just gonna give her a fictional name, Lynn. Lynn, okay. So they came to Lynn's house, knocked on the door. She welcomed them. I was shocked, because it's very, very rare that the IRS ever pay you a visit. They pay you a visit, or call you. They say, is there a time or place we can meet? I want to go over these items. They usually prepare you first. It's very rare that they even come knock on your door and say, let me talk to you.
Wow.
Yeah, so the more of the story, or the essence of the story, was that they assumed that they have some kind of record that there was like $1 million of winnings, of transactions, right? Of her cashing out. Let me just use that phrase, cashing out. And so they're assuming that, hey, there's some money laundering, tax evasion, underreporting of income, vice versa. So to her defense, she was nice to them. They were friendly to her. But she was like, no, I don't know what you're talking about. She freaked out.
I would too.
Well, everybody freaked out, right? But that's what I'm saying. Like, dude, don't invite nobody to your house without the proper representation.
Did she even check their badge, or do they even have a badge or anything? Could be a scammer.
Honestly, to this day, I don't know if they did.
Right.
But,
they're legit,
that's
though.
a story she shares with me.
Okay.
And so, but I'm dealing with her audit case, so I'm dealing with the revenue officer, I'm dealing with their manager, okay? Because this is relatively big case, because we're talking about over $1 million worth of income, potentially income that they're assessing her with, or they're accusing her of not reporting.
Thank you for joining us. Thank you,
So
Antito.
took over the case, got the power of attorney, dealt with the IRS, trying to figure out what the heck do they have on my client. that got them to think that this is the amount. Well, going back to that statement of win-loss, right? The casino sent them a statement that literally said there was $1 million worth of transactions, okay, that she cashed out with $1 million, right? And again, it's not one time, it's the entire year.
Right.
And in your mind, you're thinking like, oh man, that's a lot of money you lost or win, right? But if those who ever does stock trades knows what I'm talking about.
Right.
You buy, sell stocks, literally on the same amount of money that you put in the first place.
Yep.
$5,000 you put into a brokerage account. You buy ABC stock. You sell ABC stock for $10,000, or let's just say $15,000, right? You use that $15,000 to buy another XYZ stocks. You sell XYZ stock for $20,000, right? So you might not necessarily put any more money in there. It's just the $7,000 that you put in the first place. But in the transaction report,
the profit.
in the proceeds, right? Not profit, proceeds. They're going to see $10,000 purchase, $15,000 purchase, $20,000 purchase, and they add that all up, and they think you had literally $30,000, $40,000 of revenue or income there, not knowing that, excuse me, that $10,000.
It was just the original
for the same
amount.
$10,000 I put in. I sold it, right, and I got us. Maybe I made some money on that, so I made from 10, I made it to 15. I used that 15 to buy another stock. For that 15,000, I made it to 20. Right, but it's still same money that I had. Yes, the 5,000 I made is taxable. Yes, another 5,000 I made is taxable. But it doesn't mean that I have like $40,000 or $50,000 worth of revenue here that that they can be taxable. Correct, or that it came out of my pockets, or that came out from my money laundering or whatever it is, right? So, long story short, that happened. Then we got involved and said, okay, Mr. IRS, let's take a moment and analyze this further. Right? And what do you mean by analyze it further? It's like, well, let's look at her situation, what type of business she have. Can she realistically say she has millions of dollars to put into it? Okay, and I'm not saying she is or she isn't, because there's a lot of things people do I don't really know 100% of the time. Right. Yes, I do ask diligent, do my due diligence and ask probing questions, but I cannot assume that she didn't have that money or that she doesn't either. But let's be realistic. Based on her life situation, based on her asset, or how she lives and what she does, does she have $1 million to go and invest in that? And is that a real $1 million she has, or is that what they call transactions that's worth in the millions, right? So, man, it was tough because I'm on the phone with the IRS officer, revenue officer, and the manager, and they kept insisting that $1 million transaction amount were actual money that she put into, the casino. Wow. Right? And what they failed to recognize is that a lot of time people win at a table game or whatever it is, they go and cash it. Right? Even though they might play again, but they'll cash it at the cashiers. Because the players really know one thing. The more you cash money and you're using cash to buy chips, the more credit you get. Right? You get credit, free meal, free chip play, whatever it is. Does a casino know that? Of course they do. Because they see that, hey, you won $500, you went and cashed it. Right? You got that $500 chips, whatever, and you put it into a new game. They know that's not same money, but the fact of the matter, they see that you're playing. They see your playing time. They look at your average betting amount, right? Again, how do I know all this from a casino standpoint? I had to learn all this because I'm dealing with the casino and the players, right? And there are things about the casino that I learn more than I want to learn, right? But it was kind of crazy that the IRS see that transaction as the entire transaction as all money that she has. Not to see that it's from similar amount of money, same money being cash, being converted to cash, and then play with chips, being converted cash, playing with chips, converted cash. Back and forth, Right. Okay. So the frustration one is that it wasn't even about tax law. It wasn't about deductions. It's understanding how that money is even generated. Right. Does that make sense? And conveying to people that don't even come from that world. You'd be surprised how little they know about this. Right.
I mean, most people, like common people, they go to a casino, they try to win, have fun or whatever, and then if they win, good. If they lose, oh well, right? But then if, like how you're saying, if your client is using the same amount of money, and then whether she's winning, she exchange it back into like, cash it out and then exchange it back into chips and then using the same amount, right? But then the casino is only like keeping track of like what's convenient for them. They're like, oh yeah, she buy in another one, and then just keep it in, know?
Right. Well, and that's the thing, right? If her tax preparer was there to help, it'd be helpful, right? If she didn't invite the IRS in there and start saying incriminating things, right? And that doesn't mean she should lie to them, but there are things you say that could be misinterpreted. There's also a language barrier in a lot of these cases. But what we did persistently was just to have to explain to these people, that's not how the casino works. That's not how putting money in. Look at it like for an example of a brokerage statement, a brokerage account. You're going to see millions of dollars transacted. It doesn't mean the clients have hundreds of millions of dollars, right, in actual cash, new money coming in every transaction. A lot of times those come from sales of various stock, if it's a brokerage statement, or sales of chips if it's in the casino environment. So we finally got it resolved, finally convinced them that was the case. Of course, there's other particular issues with this case, but we won because we literally had to explain to the IRS how this casino works, how the players sometimes equalize the playing field by cashing chips in to get credit, right? But the sad part was that it was so prevalent in the type of client that we got, in that they all thought that they won some money, they lost some money, they don't have to worry about reporting. Right? And because of the fact that most of these are also salon owners, small business owner, cash-based business, that they think they're hiding the cash and not reporting it as income from a tax standpoint, right? Because oftentimes people have cash-based business, the Schedule C or so prop business that are not reporting accurately. And so these folks totally speculated, assuming the worst, that, hey, they're hiding money somewhere. Right? So these are the negative forces we're dealing with, right? One, lack of understanding how the industry works, but also assuming that because of cash-based business that they're hiding cash, right? So we got the result we wanted. The client was happy. I was conflicted, right? I was happy to get the case won in our favor, but conflicted, like how many other cases are there out there similar to this? That they, because of the lack of knowledge of that industry, that they're assuming people are not reporting their winnings, or that people are receiving all this cash, right, and hiding this money because they're assuming that all that transaction was related to them putting in new money.
So would it be in the same situation as like, how you put in the example of like the stock market, or is it just because like in the casino industry that the IRS is not really familiar, that's why they're assuming, the worst on it?
Well, no, it's the same way. And again, we're not talking about the issue with a brokerage statement or your Schedule D form when you file your trades, that sometimes the proceeds are not reported or reported accurately. And especially these are company-sponsored stock options or RSUs or NSO or Employee Stock Purchase Plan, ESPP, and that I can discuss in the next chapter. But oftentimes you see a statement and IRS assuming that those are all profit. Well, they haven't taken into account the fact that there are cost bases to offset those profit. And number two, if there are company-sponsored shares or company-sponsored restricted stocks or employee stock purchase plan, some of those proceeds are already added to your W-2. They're already been taxed, right? But you still have to report them on the Schedule D because they're actual transaction, right? Stock trade transaction that's reported. But you don't report that as a gain in addition to the fact that you're already being taxed as a W-2. Does that make sense? But again, that's a different topic, but similar to the fact that you don't just see an IRS letter and see what they are assessing you as and accept it as the fact. They haven't seen the full picture of that circle. They only see half of that circle. The other half is the cost basis and the type of stock trade that was, whether it was the employee-sponsored shares or employee stock purchase plan or RSUs, where some of those are already taxed as ordinary income and is added to your W-2.
Yeah.
But that's a different story.
So after, winning that case, what was the result? Did they finally analyze it back? What was the original amount for her?
Right, and that's the thing about casino. It's 90% of the time, or more than that, we lose money.
Yeah.
Right?
Yeah.
And
all the
so
time.
they thinking you winning this much when they themselves have to realize that people don't win money.
Yeah.
But the burden of proof on proving losses is on you, right? Because you can only offset gains with losses. You can't just say I lost $5,000 and claim that $5,000 on your taxes.
Right.
You can only claim losses to the extent of your winnings, right? So yes, they have her winning certain dollar amount, but now we can so prove that she has losses as well. The sad part is not all casinos have the win-loss statements.
Yeah.
Especially the card rooms and in small casino, they don't track that. So receipts, financial records, withdrawals, all that needs to be proven and shown to them that, hey, I am a gambler and I do show here that I have losses to offset my winnings.
Only offset winning, so even if you're losing, you can't no winning, then you can't claim.
Everybody's gonna claim that on a tax return. That's the case.
That's gonna be a lot of work for you.
Yeah. Most of us don't have winnings, but we have a lot of losses. So I hope that added value. I know we got sidetracked with the stock stuff, but just to get you the gist of it, the moral of the story is just the fact that they don't interpret it the same way as how that industry reports, and so there's a disconnect. But we'll get into the stocks part next time.
Okay, thank you so much everyone for joining us today, and thank you Antito for sharing all of those toughest audit case. I'm sure you all have some value and probably in the same situation or in the same case right now. If you ever have any question, please visit our website OurSalonMoms.com, and if you have any question, just send us an email and we'll be able to respond back to you guys with your answer. Thank you for joining us. Thank you, Antito.
Okay.